The Bitcoin market had another wild week. There's contagion everywhere. The price keeps dipping down below $20,000, and everyone's asking, what the hell is going on with the decentralized digital currency? Well, in this week's update, hopefully we'll clear up all those answers. Don't forget that now this weekly update is brought to you by FTX US. Click on the link in the description to go check them out. All right, let's get into it and start looking out at Bitcoin first. What we can see here is that Bitcoin trading just above $19,000 right now. Then we can go ahead and take a look at the actual network itself. And what we see there is that the market cap is now trading well below $400 billion. We know that the inflation rate is only at 1.76%, which is in deep contrast to the US dollar inflation rate, somewhere around 8.5%. The supply of Bitcoin issued into the circulating supply stands at 90%. And of course, real exchange volume is at $5.46 billion over the last 24 hours. We know that miners, their revenue has been dropping drastically. They're only being paid about $17.7 million in the last 24 hours to continue to secure the most powerful computer network in the world. GBTC Premium has actually flipped to a discount and has been widening at an aggressive rate and now sits at minus 36% to NAV. And of course, Bitcoin down about 72% from its previous all-time high back in November. Then we can go ahead and we can take a look at price comparison between Bitcoin, gold, and the S&P 500. Bitcoin down 43% from just 1 year ago. Gold sitting at plus 1% and the S&P 500 down 13%. But over any other timeline between 2 years and 10 years, Bitcoin has drastically outperformed these other assets. Then we can take a look here and see the closing history of Bitcoin. 557 days out of all of Bitcoin's life, it's actually closed at a higher level. That means for 88% of Bitcoin's life, if you had bought it and held it till today, you would be in profit. If we line up Bitcoin compared to assets like gold, S&P 500, NASDAQ, and TLT, we can see that the compound annual growth rate over the last decade, sitting at 122%, drastically outperforms any of the other assets. We can also see that the 5-year Sharpe ratio at over 1 is something to continue to make it an attractive asset as to why people may want to put it into their portfolio. Now, of course, these individual network metrics and things around the price itself only tell one part of the story. If we take a look at Blockware, doing some great research over there in their newsletter on a weekly basis, we can see that they've taken a deep dive with Will Clemente on all the on-chain analytics. Let's get right into what they've got. In terms of the monthly performance of Bitcoin, the last 2 months, it's the worst stretch in the history of Bitcoin. Not something to celebrate. We then can take a look, and Will's been talking about the death spiral of Terra Luna for quite a while. His question all the way back in May was, where will the contagion show up from the UST meltdown? How many crypto funds and projects were holding UST? How many custodians lending clients funds in Anchor, etc.? This is crypto's Bear Stearns Lehman Brothers moment. But here, there are no government bailouts, and that was quite a forward-looking thing. We can see a lot of the problems showing up across the market, all sorts of margin calls and unraveling of tons and tons of leverage. This is showing you the market caps and how they're becoming depegged or decoupled from all of those altcoins. Then next we can look at the exchange net position change. And what we see here is because so much complexity is in the market, there's so much fear and uncertainty, people are nervous. This is the largest depletion of coins from exchanges in Bitcoin's history, according to Blockware. Next up, we can see the capitulation being reflected across realized losses, net unrealized profit and loss, and spent output profit ratio. Here we have the entity adjusted net unrealized profit and loss down big. Next up, we can see that the net realized profit loss also significantly down. And then lastly, you can see the entity adjusted SOPRO with a 14-day moving average also falling off a cliff. After that, we can go and see that the capitulation from miners, it's already here. We continue to see lower Bitcoin price driving higher hash rate and difficulty and higher energy costs. That puts the pressure on those miners and their margins. Hash price is now its lowest since October of 2020, according to Will, and hash ribbons have crossed. And now it's showing that miners are feeling the pressure, and a lot of them are going to have to unplug their machines, and they might have to sell some of their coins as well. But one bright spot in all of this is Murad posting this chart right here in his return to Twitter, showing that there is a ton of dry powder. In the top, you have the Bitcoin price going down, but at the same time, you can see USDT and USDC, two of the leading stable coins, tons and tons and tons of dry powder sitting on the sidelines, just waiting to be deployed into Bitcoin once people feel like we're at the bottom. Next up, we can see that Bitcoin's market price is now below the realized price, looking here at the MVRVZ score. And that means the market capitalization based on the last time coins were moved on chain is higher than where the price is today. The market's underwater in aggregate, and that shows that a lot of people look at these as buying opportunities. Of course, we can take a look at the 4-year trend. Only the 4th time ever Bitcoin is trading below that 4-year trend. That signals somewhere near a bottom in the past. About 3% of Bitcoin's existence has traded below where its 200-day moving average and below realized price as well. Well, that's where we sit right now. So that gives us a sense that we are at very, very depressed levels from a price to value standpoint, and a lot of people are starting to get excited. Now, of course, nobody knows what the future holds, but what we do know is over the last couple of weeks, there has been massive chaos across the market. Bitcoin's price has fallen off a cliff, and we continue to see contagion throughout the market. There are multiple centralized lenders who are in trouble, and there's also a ton of pressure from funds at the end of the first half of the year going ahead and selling their assets, rebalancing, or giving redemptions to their LPs. Where we go from here is anyone's guess, but a massive part of it is the macro environment and the Federal Reserve's continued commitment to go ahead and conduct quantitative tightening. They're raising interest rates and they're selling assets off their balance sheet. That macro story overlaid on the micro story of Bitcoin has a lot of people paying attention. They want to understand what exactly is going to occur. In the next 3 days, the banks are closed for the July 4th weekend here in the United States of America. And that means that a lot of people aren't going to be able to get fiat currency onto the crypto exchanges. The last time we had a 3-day bank holiday, all of a sudden, the prices fell pretty significantly. Was it because of the bank holiday or was it because of the contagion in the market? It's hard to parse those two things apart. And so pay attention this weekend. We'll see what happens, but I think that there should be some pressure downwards on the Bitcoin price. Of course, that doesn't mean that Bitcoin's going to zero. It's not going to disappear. All we are watching is short-term pressures at the expense of the long-term viability of Bitcoin. Bitcoin is not going away. Bitcoin will continue to do exactly what it was designed to do. It's the strongest computer network in the world. It has a programmatic monetary policy. There's a lot of people around the globe who find that incredibly valuable. Now, speaking around the globe, FTX, one of the best exchanges in the crypto world, they've got services for both people internationally and here in the United States. If you're interested in buying Bitcoin with very, very cheap fees, you can go ahead and test out FTX US. You can click on the link in the description. Their fees are sometimes as much as 85% lower than their competitors. They've also added things like digital stock trading in beta, where you can go ahead and you can buy stocks on the same exchange. There's no transaction fees and there's no payment for order flow, as they try to get you the best pricing available. Check out FTX US. They make this video possible every single week. By supporting them, you support us. I hope you guys enjoy these weekly updates, and we'll go ahead and see you guys next Saturday. Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.